Markets are sending mixed signals today as investors weigh competing narratives. Welcome to MTRS_Market Pulse. Here is your complete Forex market briefing for June 13th. Currency markets are being driven by a complex mix of central bank policy, geopolitical risk, and shifting growth expectations. Let us break it all down. Here is a snapshot of how the major currency pairs are trading today. Euro to US dollar is trading at 1.16, gaining 0.32% on the session. The world's most traded pair is driven by ECB versus Fed rate differentials. Currency markets are reacting to European weapons used against India, US urged Russian oil purchases after Ukraine war, Jaishankar ETV Bharat. Pound sterling to US dollar is trading at 1.34, gaining 0.34% on the session. Sterling is highly sensitive to UK inflation data and Bank of England rate guidance. Investor sentiment is being shaped by Trump's tariffs, Fed minutes, rumbles Bitcoin by what's moving markets. US dollar to Japanese yen is trading at 160.13, gaining 0% on the session. Dollar yen tracks the US-Japan rate differential and Bank of Japan intervention risk. Equity markets are responding to reports that gold extends losses to more than 3% after crucial inflation report Yahoo Finance Canada. USD SGD is trading at 0.7788, gaining 0% on the session. The Singapore dollar reflects Asian FX sentiment, trade flows, and MAS monetary policy. Currency markets are reacting to European weapons used against India, US urged Russian oil purchases after Ukraine war, Jaishankar ETV Bharat. Australian dollar to US dollar is trading at 0.7049, gaining 0.78% on the session. The Aussie dollar closely tracks commodity prices, especially iron ore, and Chinese growth signals. Investor sentiment is being shaped by Trump's tariffs, Fed minutes, rumbles Bitcoin by what's moving markets. US dollar to Chinese yuan is trading at 0.1479, gaining 0.15% on the session. The onshore yuan reflects PBOC daily fixings, US-China trade dynamics, and capital flow controls. Equity markets are responding to reports that gold extends losses to more than 3% after crucial inflation report Yahoo Finance Canada. Now let us look at the macro forces behind today's currency moves. On the geopolitical front, the move follows reports that stock market jitters remain amid tech fears and renewed Middle East attacks. This is adding a risk premium across energy markets and supporting safe haven demand. Investor sentiment is being shaped by Trump's tariffs, Fed minutes, rumbles Bitcoin by what's moving markets. Rate expectations remain the single most powerful macro driver for equities and currencies right now. On the data front, investor sentiment is being shaped by gold. Silver ETFs tumble up to 5% as bears dominate precious metals market NDTV profit. Currency markets are reacting to European weapons used against India, US urged Russian oil purchases after Ukraine war, Jaishankar ETV Bharat. Our near-term view on Australian dollar to US dollar. Australian dollar to US dollar is in a consolidation phase, a pattern that can precede a significant directional break. Watch the $0.7190 resistance and $0.6908 support as the boundaries of the current range. Currency markets can move fast and unexpectedly. Central bank surprises, geopolitical shocks, and data prints are the key risks to monitor. Here is your market watch list heading into the next session. Keep a close eye on central bank speakers and rate commentary, and key economic data releases. Any one of these could be the catalyst that defines the next major directional move. If this breakdown was valuable, please share it with anyone who follows the markets. Subscribe and hit the bell so you never miss a market update. We read every comment. Drop your view below. Thanks for watching MTRS_Market Pulse. Nothing here constitutes financial advice. Please conduct your own due diligence. Good luck in the markets, and we will see you in the next video. That is your Forex briefing from MTRS_Market Pulse. Subscribe for daily currency coverage.